Hey, it's Clay, and this will be a video chart on ticker symbol VISL. We will take a look at the 30-minute time frame. What do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to this time frame that does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. If I were forced to just summarize this, using trading jargon and very quickly, this was a good old-fashioned gap and trap. What do I mean by gap and trap? Well, to keep things in perspective, on, let's see what it's today, Tuesday. So on Monday, the price closed right down there. And to give credit where credit's due, the price opened up all the way up there. So hence the gap up. The price then made a very nice move, and the price was moving upwards, upwards, upwards. And then some poor souls bought up there. And then after there is where the trap happened, and then just right back it went. Now, it didn't go all the way back down to where it started, but I mean, when you consider the fact that the price was way up there, and then all of a sudden it closed all the way down there, there's really no other way to put that other than a gap and trap, which is, a very bearish move. But that also kind of segues into what makes this an interesting setup going forward, and that is revolving around this area of support down here at the dollar mark. Now, why is that important? Why is that interesting? Well, a couple different reasons. First off, and this will mean a little bit more to those of you that have traded for a while, but if you have traded for a while, then I'm sure you've seen stocks like this in this price range where they have this kind of gap and trap, a price action where the price makes a great move, and then all of a sudden, the price gets hammered back downwards, which is what happened here. But the interesting part is, okay, after all that occurs, where's the price at in terms of, former areas? And the price isn't quite there, but it's definitely within the range of this former area right here of support. And why is that area important? Well, quite frankly, because the last time it was down there, it produced a very nice bounce. Now, don't get me wrong, and I really wish I could say trading was this easy. Just because the last time the price was down around $1 and a big bounce happened does not mean that for sure the price is going to bounce again. But it's at least rational. It's at least a logical thought to have that, the price very well may bounce from there. Now, if the price had never bounced from that area before, and I'm sitting here saying, yeah, it looks like a bounce could happen, you'd be totally justified in saying, why are you saying that? There's been no track record. It's never bounced from that area before, so why would you say it would bounce now? But in this situation, it has bounced, plus it's just simply the round number of $1. So a lot of people are going to be watching that level. So again, no such thing as a guarantee, so I can't sit here and say that it's for sure going to bounce, but that's also why risk management, risk control is very important. But definitely one of those levels where a whole lot of eyeballs are going to be watching it tomorrow. So let's see if $1 can hold, and if it can it produce a bounce? We'll see what happens. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.